welcome back to the channel, or welcome to the channel if it's your very first time here, and bam, Christmas. You see that behind me? Merry Christmas to anybody that celebrates, as this is the last video you guys are going to watch here on the channel before the Christmas holiday. So if you guys celebrate, as I said, Merry Christmas. If you don't celebrate, happy Wednesday, I guess. But anyway, my name is Troy, and in today's video, I'm going to share with you 5 dividend stocks that I like going into next week. Now, you might be wondering, what makes these lists so much different than all the other top 5 lists all over the internet? Well, for starters, they all have ex-dividend dates of this coming week, which means you're going to get paid sooner rather than later. They all have long histories of outperforming the S&P 500 over a long period of time. They all have super low payout ratios and super high dividend growth rates. So if any of that tickles your fancy, this series goes live every Friday at 8 a.m. Central Standard Time. So make sure you subscribe and keep coming back. Without further delay, let's go ahead and dive right in to number 5 on this week's list, which is CME Group, stock ticker CME. Today actually marks the very first time I'm ever talking about this stock right here in the channel. So let's go ahead and take a peek at the numbers behind this company. CME is an annual payer in the financial sector, paying $5.80 per share per year with a forward dividend yield of 2.45%. CME has been paying and growing this dividend over the last 14 years. They have a 3-year dividend growth rate of 8.63%, a 5-year dividend growth rate of 9.06%, and a payout ratio of 45%. Now, at the time of recording, CME Group was trading 4.75% off of their 52-week high. They have an ex-dividend date of December 27th with a payout date of January 16th. And looking at this chart, you're going to be able to see the growth of a lump sum $10,000 investment over the past 10 years in this stock versus the S&P 500, while only reinvesting your dividends since then. CME would have turned that $10,000 into $40,225.33, which outperforms the S&P 500 by $4,072.74. Next up, and coming in at number 4, is BRT Apartments, stock ticker BRT. Including today's video, this is now the second time I've mentioned this stock right here in the channel. And if you go back to the last time I spoke about it, which was December 15th of last year, BRT has actually underperformed the S&P 500 since then, but I like this stock long-term and the numbers behind it, so let's go ahead and look at those. BRT is a quarterly payer in the real estate sector, paying $1 per share per year with a forward dividend yield of 5.33%. BRT has been paying and growing their dividend over the last 6 years. They have a 3-year dividend growth rate of 11.99%, a 5-year dividend growth rate of 8.8%, and a payout ratio of 86.58%, keeping in mind that this is a REIT. At the time of recording, BRT Apartments was trading 7.22% off of their 52-week high. They have an ex-dividend date of December 23rd with a payout date of January 6th. And looking at this chart, over the last 10 years, BRT would have turned into $40,718.16, which outperforms the S&P 500 by $4,565.57. First up on the podium this week, and coming in at number 3, is Danaher, stock ticker DHR. Including today's video, I've now spoken about this stock 4 times right here on the channel. And if you go back to the very first time I spoke about this one on June 17th of 2022, DHR has actually underperformed the market since then, but I like this stock long-term and the numbers behind it, so let's go ahead and look at those. DHR is a quarterly payer in the healthcare sector, paying $1.08 per share per year with a forward dividend yield of 0.46%. DHR has been paying and growing their dividend over the last 10 years. They have a 3-year dividend growth rate of 17.68%, a 5-year dividend growth rate of 14.53%, and a payout ratio of 12.92%. Now, at the time of recording, Danaher was trading 16.62% off of their 52-week high, so possibly an opportunity here. They have an ex-dividend date of December 27th with a payout date of January 31st. And looking at this chart, over the past 10 years, DHR would have turned that $10,000 into $44,056.24, which outperforms the S&P 500 by $7,903.65. With that being said, we're already a little bit over halfway through this week's video. You know if you like it or not. If you didn't take a second already to leave a like on the video, please do so now, as it helps me with the algorithm somehow. Also, I want to hear from you guys. Do you guys have any stocks that you guys hate on this week's list? Any stocks you guys love or personally own? Or any stocks you would personally add, keeping in mind they all need to have ex-dividend dates of this coming week? Let me know in the comments down below. But now, let's go ahead and get the number 2 and number 1, which you're not going to believe. Next up, coming in at number 2 is Bank First, stock ticker BFC. Including today's video, I've now spoken about this stock 6 times right here in the channel. And if you go all the way back to the very first time I spoke about it, which was June 17th of 2022, BankFirst is also underperforming the market since then, but this stock has great numbers long term, and I want to show you why. BFC is a quarterly payer in the financial sector, paying $1.80 per share per year with a forward dividend yield of 1.69%. BFC has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 18.57%, a 5-year dividend growth rate of 11.85%, and a payout ratio of 22.73%. Now, at the time of recording, BankFirst was trading 3.34% off of their 52-week high. They have an ex-dividend date of December 23rd with a payout date of January 6th. And over the past 10 years, BFC would have turned that $10,000 investment into $53,890.97, which did outperform the S&P 500 by $17,738.38. And you guys aren't going to believe the numbers behind this next stock, or maybe you will. Coming in at number 1 is Broadcom, stock ticker AVGO. Including today's video, I've now mentioned this stock 10 times right here on the channel, and if you go all the way back to the first time I told you guys about this one, on June 17th of 2022, Broadcom has kind of embarrassed the S&P 500 since then, so let's go ahead and look at the numbers behind this beast. Broadcom is a quarterly payer in the technology sector, paying $2.12 per share per year with a forward dividend yield of 0.94%. Broadcom has been paying and growing their dividend for the last 15 years. They have a 3-year dividend growth rate of 13.5%, a 5-year dividend growth rate of 14.71%, and a payout ratio of 34.45%. Now, at the time of recording, Broadcom was actually trading 1.71% off of their 52-week high. They have an ex-dividend date of December 23rd, and they'll pay you before the end of the year at December 31st. And here's where this one just blows the competition out of the water. A $10,000 investment into Broadcom just 10 years ago would have been turned into $300,673.61, which outperforms the S&P 500 by a barely noticeable $264,521.02 over the same time frame. So if you guys happen to know anybody that holds a lot of Broadcom stock, ask them to pay for lunch next time you guys go out.
Let's go. You're buying.
So first, I want to say thank you guys so much for watching and sticking here to the end of the video. But if you guys happen to be watching it after December 23rd of 2024, it would be in your best interest to make sure you're subscribed to the channel, because all these stocks have ex-dividend dates of this coming week, and all of them are quarterly payers, and one's even an annual payer, which means if you guys did miss out on that ex-dividend date, you now need to wait at least 3 long months, if not a whole year, before you get paid from any of these companies, and we all know
Ain't nobody got time for that.
With that being said, you guys did already miss the ex-dividend dates for last week's list, but if you guys are looking for 5 more high-quality dividend stocks, make sure you check that out right here. But until next time, see ya.